Welcome back to the housing market update. This is the first full week in August. A lot going on. We're going to get right into it, but we're kind of some of the things that happened last week still are having impact this week. Last week the Fed met. All right, they met and they're not going to meet again until the end of August, but the Fed heads are talking. We'll talk about that. We're going to talk about why they may actually raise the Fed fund rate in September. A couple months ago, that wasn't really on the table, but now it is, and we'll break that down. We're also going to talk about your neighborhood. We got the July Honolulu Board of REALTORS housing market report for the month of July, and guess what? The housing market's pretty strong. We're going to break down some of those numbers for you. And if you live in one of these neighborhoods or you're looking to buy in one of these neighborhoods locally in Oʻahu, do me a favor, go ahead and DM the zip code and I will supply you with a breakdown on your specific zip code. Mililani, Aiea, Pearl City, Ewa Beach, Kailua. I have them all. I can provide those to you. It gives you good insight on really where you're located or where you are in this market with regards to your house, whether it's a single family home or a condo. Because believe it or not, those are two different housing markets in Oʻahu right now. And if you're a realtor, this is something you can share with your clients. All right, take a picture of the real estate snapshot slides that I have. Share it with your clients. You can even send this video link. All right. Matter of fact, if you haven't subscribed, and many of you haven't subscribed, do me a favor. Go ahead, subscribe, share it, because you know what? This information is important. Whether you own a home, whether you're looking to sell a home, or whether you're looking to buy a home, this information is super important for you because it will impact your ability to sell quickly or to buy and get a great deal on a home. Let's get into some of the specifics. Just to show you how volatile the rate market is, we actually saw Monday through Tuesday and into Wednesday rates hit their highest level in over 14 months. Then on Wednesday, we had two things happen. First, Fed officials, and this is one of the reasons why interest rates went up initially this week, is because the Fed officials are split, and they're split publicly. They're actually getting out there speaking. Minneapolis Fed President Kashkari and then also Governor Cook, they both said that we should hike rates now, and now is the best time to hike rates. And again, last week we were 9-3 to stay where we're at. So again, a lot more dissent than usual. And there are a couple. Fed Governor Daly is saying, hey, let's be cautious. But anytime you get a Fed chair or a Fed member of the Fed speaking about raising rates, and these aren't mortgage rates, these are the Fed funds rate, which indirectly will impact mortgage rates over time. Anytime they talk about it, interest rates react negatively and they start to go up. But we had a big report come out on Wednesday, and we'll break this down a little more. But the ADP, that's the private sector job report, came in much softer than expectations. That was great news that we received on Wednesday, and not a lot of news coming out on Thursday. The big news is going to be on Friday when the Bureau of Labor and Statistics jobs report comes out. And actually, unemployment rate is expected to stay the same at 4.2%. Thursday, there really should not have been much action, but you know what? Iran, Middle East had to step in and mess with everything. And oil prices have gone down all week. We've been down below $75 a barrel. That is great news. But Iran and Oman, basically the two countries that really the Strait of Hormuz the waters go through, they were meeting, and supposedly they were meeting with the U.S. as well, and they were striking a deal to open the Strait of Hormuz. Well, guess what? They did. But guess who's not included in that deal? U.S. and Israel are not included in that deal. That is not good news. And what the hell's going on, guys? Come on now. Really? Really, you're not going to include the U.S. and Israel? How is that working towards peace? You know, Iran, you know, Oman, we're not going to go for that shit. Anyway, so that news there really shot interest rates up, and any amount of gain that we had over the last couple days, or any amount of gain in the sense that interest rates came down, we just lost it today. So that's very unfortunate news. The big news though tomorrow will be the BLS jobs report. The ADP and the BLS jobs report, they should go hand in hand, but they don't always. As a matter of fact, oftentimes they are 180 out. when you take a look at the jobs, why are the job numbers where they're at? I mean, if you look at last month or the last 2 months, we had about 180,000 jobs come into play in the leisure sector because of what? The leisure and tourism, because of what? The World Cup. Well, guess what? World Cup is over, so you would expect to see some of this unemployment, these numbers come back down. We'll see what happens. Again, really, that's where we're at this week. Let's take a quick look at the ADP Jobs Report numbers so we have an idea of what we might expect in tomorrow or Friday's BLS Jobs Report.
Okay, before we move on, I gotta say this. 91% of people watching this video now aren't subscribed to the channel. And look, if you're a Hawaii buyer, a veteran using your VA loan, or you're just trying to time the market right, this is exactly the kind of update you don't want to miss. So hit subscribe now, turn on notifications if you can, and let's get to the next report.
Let's take a look at the ADP Jobs Report now, and could this be a warning sign for Friday? Look at the job numbers. All right, July, we had 44,000 new jobs. The expectation was 80,000. You can see we peaked in May with new jobs. Maybe it was because of the World Cup. Numbers came down a little bit in June, fell off a cliff in July. So really, and that's half of what June's pace was. And take a look at the medium-sized market, medium-sized businesses. Only 8,000 increase in new jobs. What that shows is, well, not necessarily a slowing market. It does show that medium-sized businesses are being much more selective in their hiring, which means they could be bracing for whatever's coming next. Now let's also look at annual pay growth. Here's something interesting. Job starts stayed at 4.4%, no change from last month, but job changers, all right, actually went up from 6.8 to 7% increase in prices. Now, in a struggling job market, you don't typically see that much of an increase in job switchers because there's really not that much demand for people to switch jobs. People want to keep the job they have. But the fact that there is a 7% increase in wages shows that while the market isn't hot, the market is hot for the right person with the right job skill sets in another company. So interesting to see the forecast tomorrow for the BLS Jobs Report, or Friday when this comes out. 83,000 jobs added, unemployment holding at 4.2%. And again, ADP and BLS, they should have similar reports, but they don't always. Sometimes they're different. They've been more or less aligned recently, but there's no guarantee, especially as the BLS Jobs Report is probably going through some sort of a shake-up or a change in how they come up with those numbers. But we will see. We will see. Never a betting person, and I never bet on the BLS Jobs Report. National averages, again, we're at 6.69% conventional, 6.45% VA, which is down a little bit from last week at 6.5%. Again, these are not my rates specifically. These are the average across the country, taken off of Freddie Mac, PMMS, and Trading Economics. What we're seeing is, for every quarter point move in the single family home market, roughly 1.224 million based on July's numbers, that's about $180 to $195 a month difference in mortgage payment. So if the Friday jobs report comes in soft, expect some relief. All right, if it comes in hot, expect another push higher as we start the next week. All right, so let's talk about the Fed. And again, they're meeting in August, but they're not making a rate decision in August. But they are going to discuss what the data they're going to use to help make their decision in September. And here's their paradox. We got a soft GDP, but is it really? We have a strong labor market. It is, but we'll see what happens with this report, and certainly we have the next report next month. All right, and then we have an inline PCE, which is a personal consumption expenditure report. So inflation is steady, but again, that's 2-month-old news. We talked about that before. So really, the next week we have inflation reports coming out, and those are going to actually show the numbers for July, which is much more closer to the cart, if you will, and we will see whether or not the higher oil prices in June and July cause inflation to tick back up? That's a big question mark. We'll see that next week. This BLS Jobs Report and the next one are going to have a lot more sway on the Fed. All right, if the job market slows a lot, I've said it already, if the job market slows a lot, that is more evidence that the Fed needs to have a pause. But if the job market shows that it's still very strong and inflation starts to tick up, you know what? There is an 80% chance that the Fed will raise the Fed funds rate in September. All right. I like the fact that we're still 9-3 for a pause in July, but we got 2 months. A lot of things can happen over that time. Everything over in the Middle East is a gamble. It's a crapshoot anyway, because nothing that we have done has really gone towards what our goals were in Iran in the first place, which were eliminate their ability to have nuclear weapons and then to keep the Strait of Hormuz open and keep the flow of traffic through the Strait so that oil prices are steady. Those things they're not guaranteed yet, and until we come to some decision on whether or not we move ahead or we step back, and there's still kind of strife in the Middle East. Can't expect to say, you can't define with any certainty what the Fed is going to do and where inflation is going to go. Jobs market's going to do what the jobs market's going to do, though. So, but the Fed, again, a couple of inflation reports, one more jobs report after this one will help really determine whether the Fed raises the Fed funds rate in September. Now, realtors, this is a slide that you want to take a picture of and send to your buyers and sellers, because this is the tail of the tape per the July HBR report. The median sales price, $1.224 million plus, that's 13.9% higher than what it was last year. That's pretty freaking high. Look at the months remaining in inventory. 3.2 months of inventory. That's down from 3.7 months a year ago. Hey, and this is the prime. This should be the top of the market. We're in the middle of the top of the market right now because of PCS, because the summer moves are really over, because school just started this week, right? I mean, traffic certainly picked up. And look at the condo market. Condo market slightly looser at 7 months of remaining inventory versus the 6.8 months that we had before. Now let's take a look at the specific geographic areas. Single family homes, man, this is a seller's market just about everywhere. Pearl City, Waipahu, Aiea, and Mililani. Less than 2 months of inventory. That's among the lowest inventory in the entire country. And Makakilo, not far behind. Kailua Kaneohe, super strong seller's market. Multiple offers above asking. Actually, in Mililani, just had a client close today on a home, and they got no credits. They went in. It was a competitive, absolutely competitive offer in Mililani. Kailua Kaneohe, I'm having buyers struggle to get their offers accepted if they're not coming in above asking. But juxtapose that against the North Shore and the leeward side. And I will say this, the inventory at 7.1 is months, that's high. And as I go through and look at some single family homes in Ewa Beach, man, I am seeing some great deals, and Kapolei as well. It is still a buyer's market there. North Shore's probably the most balanced, but you know what? There's only 29 active homes, single family homes and condos on the entire North Shore right now anyway. So that's pretty normal. There's not a lot of inventory. Now let's take a look at condos. Condos, totally different story, and it is a buyer's market. But again, I've talked about this before, buyers and sellers got to beware in the condo market. The new rules could, if your HOA, if your association isn't up to speed with their requirements, it could knock out up to 40% of the market that is available to buy your home. Buyers need to be aware of that and really scrutinize their condo docs very, very strongly, because, and guess what? The realtor can look at them, but ultimately the responsibility is on you. All right, you know what I'd be using? Claude or ChatGPT to go through and all those docs, put them in there, do an analysis. I'm telling you, you gotta do your homework, and you may find some problems with your HOA. If you're a member of a board in HOA, if you're a member, if you live in an HOA, you need to be doing this. I need to do this right now for a couple of my communities. But let's look at the buyer's markets everywhere. Every single place in the island for condos is a buyer's market. Waikiki, tons of inventory. Leeward Side, tons of inventory. Ala Moana Kaka'ako, almost 10 months of inventory. Kapiolani University, so basically all the town side, all right, lots of inventory, buyer's market, with the exception of Kailua, Kaneohe, and Waipahu, still under 4 months of inventory. So again, those are totally different markets, but I don't care where you're buying, you need to do your homework if you're a buyer, and if you're a seller, you need to dig into your HOA, all right, and make sure that you have enough coverage, you have enough going to your reserves. There's so many things that could basically put a black mark, all right, on your association, on your condo or your townhome if you're not up to speed, if your HOA is not up to speed with the requirements that have gone into play as of August 3rd, and will go into play in January 3rd, new year, when the reserve requirements go from 10 to 15% of your annual operating budget. Now let's look at the tail of the tape. This is from the July HBR report. Closed sales up 20.5% for single family homes. Man, that is a super strong market. You know what? Closed sales is up for condos too. Again, there is demand. There is a demand for condos on island. Median sales price up 13.9% year over year. Median sales price on condos, again, it's been in that, we'll break this down a little more, but steady 3%, that's not bad. Percent, look at this, 100% of homes that are selling at original list price, 96.6% for condos, so up a little bit, but you're just not that much, but still pretty good, I think. Sold above asking, 33% for single family homes, up from 26, only 11% of condos, but still an increase, which just shows despite high interest rates, there is a strong demand. New listings up 3% year over year for single family homes. New listings up almost 10%, 9.3% for condos. Active inventory down for single family homes. Again, single family homes that are priced right, they're gonna sell. But again, I go back to Leeward Side, there's still a lot of inventory. Active inventory up 3.9% year over year for condos. Again, we're over 3,000, almost 3,300, actually over 3,300 active inventory, both single family homes and condos. Again, near the highest level of inventory that we have had in 10 years on the island. Again, a buyer's market across the island, most of it in the condo range. Months of supply down slightly for single family homes, up slightly for condos. So let's break down some of these numbers a little more in depth. You can see that closed sales over the last 3 months have gone up for single family homes and for condos, actually over the last 4 months. And again, it goes back to the point that there is a strong demand. If interest rates were lower, if interest rates were at 6% conventional, 5.5% VA, man, that inventory would go down big time. And I think the home prices you'd see a big increase. Certainly for single family homes, we hit 1.24 in July or June, down slightly at 1.224 June, but still very solid. But man, I tell you what, in order for us to get above that floor at 500,000, we need to see interest rates drop into the fives. For VA, actually for conventional as well. Looking at the condos again, with 7 months of supply, condo sellers don't have the pricing power to push that median price up the way that single family home sellers do. So really, it just shows, you look at over the course of the year, we are seeing a very strong market for single family homes, completely different from what we're seeing on the condo side. Still a buyer's market on the condo side. And let's take a look again. I showed you the inventory near 10-year highs, new listings, and certainly we're at a 10-year high in inventory for active inventory for condos. Again, so much on the market. You look at December was a low point for both, but we've seen an increase steadily in active inventory. Again, people, they have to sell. And for people looking for a deal, you may find one, but you're probably not going to get a lot of credits because so many buyers who bought 3 years ago and thought, hey, you know what, my buddy bought 2 years ago and he sold his house and he made a shit ton of money. Well, guess what? That ain't happening right now. Why? Totally different market. So you're starting to see more and more homes go on the market. In the condos, man, I feel bad for some of the condo owners. They're starting to struggle a little bit. Man, if you can rent that place out, even if you're paying out of pocket, you know what? You need to run the numbers with somebody who's not going to steer you wrong and is not trying to make a buck from you. All right, your lender's not trying to make another buck from you. Your lender should be able to sit down with you and show you what the return on investment or the cost of selling is at a short sale or even a foreclosure, which you really don't want to do. It has to be, those options have to be the last resort. You know, a couple of months ago, I had a client ask me, hey, can I buy furniture for my house before I close on the home? And I was so thankful. I thanked him so much because the answer to that was no. And here's the question that I'm getting right now. Can I make a big purchase before closing on my home? The answer almost undoubtedly is no. If you open any new credit, guess what? We're gonna find out. You can hide things from your financial planner. You cannot hide things from your loan officer. We get an alert anytime. Once you're in contract, we get an alert once you get your credit pulled for a new credit card or a new car. Don't do anything like that before you close, because if you open up a new credit card, for instance, and you buy new furniture, for instance, well, guess what? Now we have to count that monthly debt obligation against your debt to income. And if you're really close as it is, you might not qualify to buy that home anymore. So it's super important. And I understand things happen. Make sure you talk to your loan officer, because actually, this go to another client who was in contract and he wanted to buy a car. And I'm like, dude, you actually can do that as long as your car payment is below such and such. And he bought it, he was new on island, he needed a car. He had a lot of room in his debt to income. He had a lot of room. He was like 30% debt to income. He could buy a car, but he did the right thing. He asked his lender, can I make this purchase before closing on my home? All right, don't assume it's no. Most likely it is, but talk to your loan officer first. Don't get into that position where you can't buy your home anymore. Actually, this was probably 10 years ago now. It wasn't my loan, but it was one of the other loan officers. The kid, he was like an E5, and he just got his BH, and he went out and bought a Prius, and he no longer qualified for that home. We were able to make it work out. We had to work something with the dealer for the car, but man, that was a bad decision. And you know what? He wasn't thinking. And I get it, where you're young. In this case, this person was young, but still, ask your loan officer, can I make a big purchase? Have that discussion. Most of the time, the answer is no. Wait until you close, but sometimes it may be yes. All right, so what to expect going forward? This next couple weeks, actually the next couple months are gonna be really big. Next week, or actually tomorrow, obviously we have the jobs report, forecast of 83,000 jobs, unemployment stays at 4.2%. And let's look at the odds for a September hike. Again, last week we were at 59%. This week, with the continued war in Iran, we're up to 80%. What's going to happen moving forward? Next week, we have CPI and PPI reports. That's Consumer Price Index and the Producer Price Index. Consumer price is the cost of goods to the consumer. That's me and you. Producer Price Index is the cost of goods wholesale to the providers of goods and services. So really big report. Expectation is that we might see an increase simply because the June slide in gas prices was followed by a July hike in gas prices. So that's what really the expectation is. And that is going to be, I think the next CPI, PPI report comes out right when the Fed is meeting, so it may not have as much of an impact as certainly this one will. And then, that following or 2 weeks later, we have the Jackson Hole meeting with the Fed, where they basically we're going to get an idea of what the Fed chair is thinking with regards to his Fed Open Market Committee. And again, the next meeting, September 15th to the 16th. What does this mean? What does this all mean for local buyers? People buying locally. Well, rate sensitive. Again, this is going to remain as long as we are at war in Iran. This market will remain volatile. And what that means, especially on the leeward side where many of the buyers are VA or first-time home buyers, they are going to be much more rate sensitive. Again, any quarter drop in rates is going to change your mortgage payment by almost $200. Places like Kahala, that town, the East Oʻahu, even the windward side where you get a lot more cash buyers, they're not going to be as affected by interest rates because they have cash. They can put more down if they need to, and that's really why we're seeing such a strong market in those areas. But the continued volatility is going to hurt buyers and in turn sellers on the leeward side until we get some stability and some stable lower mortgage rates. The bottom line, we got two markets, we got one island, all right? And you got to know which one you're in. Homeowners, if you're in a single family home, Pearl City, Aiea, Mililani, Waipahu, Makakilo, inventory is razor thin. This is a strong window to find out what your equity is worth. Personally, I wouldn't sell a home if I didn't have to. I would hold it until the market changes. Again, it's like stocks. You don't buy high and sell low, all right? You buy high and sell higher, or you buy low and sell higher. And right now, we haven't quite recovered in some areas. So that's me. If I was a homeowner, I wouldn't be selling. As a buyer, condo shoppers, beware. Condo shoppers, gotta do your homework. And you are in a buyer's market, and that's great news, but you don't want to buy a lemon. All right, there's some lemons out there. You just don't know it, and quite frankly, some of the HOAs don't know it yet. The first sign is super high maintenance fees and HOA dues. The second one is when you have special assessments. Those are red flags. You really got to do your homework, buyers who are buying condos. Realtors, hey, you know what? It's all about the market. It's all about location, location, location. Truly educate your clients. And if you're not comfortable with something, then have them talk to their lender and make sure that they are comfortable with the numbers that they're seeing. All right, I talked about this a couple of weeks ago. All right, when I'm doing a pre-approval, my average HOA price that I put into their scenario, when I'm doing the pre-approval, it's $1,000 a month now. It used to be $750, 10 years ago it was $500. Now it's $1,000. Hey, there are some HOAs, there are some really good HOAs that are below 500 still, but not that many. And that buyer who's approved for $500,000 with a $1,000 a month maintenance fee could be $600,000 or $650,000 with a $500 maintenance fee. Again, do your homework, realtors. Work as a team with your lender to educate your clients to make the best decision, whether they're buying or selling. Y'all have a great week. Talk to you later. Aloha.